Welcome back. You're watching Your World at 10. Now, there's a curious M&A situation that's developed over the weekend. Reliance's interest in FAME has only strengthened, and what was at one time just a proposal, a verbal one that too, has now become a concrete open offer at a substantial premium to the price that Inox paid for the very same transaction. So Inox paid 51 rupees. The ADAG Group is willing to put 83 rupees on the table. The only curious part of this transaction is that the ADAG Group is doing an open offer for 62%, whereas 51% of this company is already owned by the Inox Group. To better understand what the end game to such a competitive situation is likely to be, I am now joined by Sandeep Parekh as well as Nishant. He joins in from Tri-Legal. Sandeep, Nishant, thank you very much for joining me. Nishant, why don't you go first? What kind of success do you think that the ADAG Group is likely to have in a situation where 51% of the equity is already with the Inox Group?
Sure. So, as you laid out the mathematics, it's pretty clear that the Inox Group already has 51% majority control of the company. Having said that, I think with the kind of offer that Reliance has made, it may well be in a situation where post the completion of the Reliance offer, it could have more than 25% of the company, which basically means that you could well find Reliance in a situation where it could block special resolution proposals that the company comes up with now and then. That basically implies that the company would not be able to issue fresh share capital, enter into mergers or court-sanctioned restructurings, and several such important corporate actions without the approval of Reliance if it manages to garner more than 25%.
Sandeep, would you agree with that, that the only thing Reliance or the ADAG Group, if I may call it that, is likely to gain from this competitive situation is that it could be in a position of creating substantial nuisance value for the existing shareholder, controlling shareholder, that is Inox?
Yes, I would agree with that. Plus, I would kind of add a couple of other things. One is, of course, even crossing 10%, they already have certain powers like calling off a general meeting, etc. Besides, remember that the percentage which they vote it's actually the percentage, the denominator is the people who are attending the general meeting. So even if they have 10%, they can probably still block a general, they can probably still block a special resolution. So they would start having nuisance value anywhere from 10 to 26%. In addition, I think also Reliance is kind of they're making a very, very strong moral argument, saying that why did you do a private transaction at 50 or 51 rupees when we were offering you 80 rupees or 85 rupees? So they're making a very, very persuasive case and saying they're putting their money where their mouth is. So I think they're making that additional case, saying that the minority shareholders ought to have got the benefit of that same price.
Do you believe that case will hold, in front of SEBI, Sandeep? Because it's a question I've asked on this show before when the Inox deal did happen with FAME, and at that time, all we heard was grumbling from the ADAG camp saying, hey, we were willing to offer you a lot more. Of course, at that time, we didn't know if there was a concrete offer on the table or not. But lawyers had opined at that point in time that the Shroff family, which is the promoter family of FAME, like any other shareholder, sold their stake to whoever they thought was best suited to that stake, and that there was really no fiduciary responsibility for them to have to disclose that there was a competing and higher offer to shareholders of FAME at any point in time. Where do you stand in that debate?
No, I think I've come on your channel before and I've said that legally Reliance doesn't have a case, because you can do a private transaction at any price over the market value. So since the market value is between 40 and 45 at that point of time, clearly a deal at 50 or 55 or 51 is totally legitimate. It does not violate the takeover regulations. There's no issue from a legal perspective. Why do you think it's a
morally persuasive argument, Sandeep, if I may interrupt you?
Yeah. No, because once you do a tender offer at a stage where you already own 50%, nobody else can make a kind of a real comparative bid, because you already have a majority stake in that company. So you're kind of blocking off a comparative bid, and therefore you're not giving a true exit opportunity to other shareholders to exit at 80 rupees or whatever higher price. So it's not good for minority shareholders, but it's totally legit from a legal perspective.
Nishant, where do you stand in this debate? Because if I remember correctly, a few weeks ago, the argument I posed to lawyers was that, at the end of the day, as shareholders, the Shroff family is free to sell to whoever they want, but they also run the board of this company, and the board has, or does the board have, the fiduciary duty of being able to put at least the knowledge of a higher offer to minority shareholders? At least should that disclosure at least have been made? Where do you stand in this debate?
Sure. I personally believe that, when a shareholder is looking to sell his shares, there's absolutely no fiduciary duty or any other sort of duty that he owes to the other shareholders of the company, even if the person selling the shares is in control of the target company. Having said that, I think the code has actually taken care of the situation. Reliance has come out and has made a competitive offer. And so really speaking, the argument that public shareholders will suffer is not correct in my thinking, because frankly speaking, the public shareholders now have access to the Reliance open offer and can very well tender shares at a much higher price. So the market really has worked quite well within the parameters of the code.
Keeping that in mind, Sandeep, do you think that there is any need for SEBI to, I won't use a stronger word as investigate, but at least look into these allegations that the ADAG group has made, as well as the issues they've raised of fiduciary duty? At the end of the day, if the objective of the code is to ensure that the minority shareholder gets, adequate exit, then in this case it has. It is, the minority shareholders are being offered a substantial premium over what Inox had offered them. They're being offered 83 rupees. So if they can happily exit using the Reliance offer, if they're so pleased.
Menka, let's analyze this slightly more deeply, which is, let's divide it into three classes of people. You have, one is the class of people who are going to tender their shares at 80, 81 or 83, which is the Reliance tender offer. They're clearly going to be extremely happy with the way things have turned out. So they're clearly not unhappy. They're the minority shareholders, they're tendering at a very high rate, which is at a 60 or 65% premium to the tender offer. The second class is those people who sold shares in the open market till today, which is they've been selling between the range of 40 to 55. And clearly those people have been hurt because they tendered at a specific price which is much below what Reliance is going to offer. And the third class is the private shareholders, which is the buyers and the sellers, which the sellers could have sold to Reliance at 80, but they chose to sell at 51 rupees. So clearly that's a private transaction that's off limit. There's no fiduciary duty to off anybody to anybody. You can sell whatever you want, and SEBI says that you have to sell it above market price. And which is, at that point of time, market price was in the range of 40 to 45, so clearly they've sold above market price. So this clearly kind of, from a legal perspective, all the noise which Reliance has made is just noise, it doesn't mean much. But having said that, of course, Reliance can create sufficient nuisance value, because if once they capture 20, 25, 30%, they can block special resolutions. Even at 10%, they can call general meetings of shareholders, etc. So there are lots of rights which they will acquire, which they're certain to acquire, given that they're offering such a huge premium to the current market price.
Is there a twist that I'm missing, Sandeep, Nishant, in this case at all? How do you think this is likely to progress in the next few weeks? Of course, a lot is based on the kind of response Reliance will get to its open offer, though I was trying to check with some of the sources at Inox to find out if they would at all be willing to flip their stake at a premium, and the resolute answer I got from some of their legal advisors was no. But how do you expect this to pan out over the course of the next few weeks? Sandeep, you go first.
I'm not very sure how it's going to pan out, because we don't know what percentage of stake Reliance is going to pick up from the open offer. But clearly, with a 50% stake, they've got a daunting task ahead of them, which is, the other side has 50% stake. So it's going to be a challenging way for Reliance to handle this situation. But clearly, they will bring nuisance over a period of 3 months, 6 months, 1 year. And at the same time, as I said, they've made a moral argument saying that why did you sell, even if it's a private transaction, why did you sell at 51 even though we've offered you more than 80? So they will bring both these arguments, and let's see how it pans out. I won't be good at predicting how this is going to pan out.
Nishant, quick last word to you on how you think this is likely to pan out over the course of the next few weeks.
Sure. Let me be slightly more aggressive. Going by recent experience, I would think one of the parties has to let go, because you can't be in a situation where two competitors have significant shareholding in a company and possibly have board rights. One of them definitely will, Inox will. But if Reliance does manage to get a significant shareholding in the company, it will not be out of place for Reliance to demand a board seat. And therefore, just looking at a situation of that sort panning out in future is I guess unsustainable for the company. And therefore, I would see much more excitement in the days ahead, and possibly some sort of resolution between the two parties.
All right, that's a tall order. Resolution between the two warring sides. Nishant, Sandeep, thank you very much for joining us on Your World at 10. We're entirely out of time. An interesting M&A situation, like I said. They're quite apt for the location that I have spent my entire day at, which is the IBA M&A conference today. With that, we need to take a quick break on Your World at 10, but we're going to come back.